Hi all, this is Kelvin here. Welcome to this week's latest edition of the weekly technical outlook on the major stock indices. Before we actually jump into the technical configuration and the key levels to watch on the SPX 500, the Nasdaq 100, the Hong Kong 50, and the Japan 225, as well as the German 30 index for the this week, which is the week of 17th of May and 21st of May. Let's take a look at the disclaimer slides first. All right. Now, let's take a look at kind of a raw momentum of last week performance, which is 10th of May versus to 14th of May versus its prior week and its prior 4 week average. So all in all, we could see is that the four major US benchmark indices, the S&P, the Nasdaq, the Dow Jones, as well as the Russell 2000, all has a kind of a negative week for last week. So if you recall that in the first 3 days of last week, we start to see a kind of a very weak performance on these indices, triggered by this ongoing global inflationary scare, where we start to see a very high US CPI data. And but very interestingly, on the last 2 days of last week, on starting on Thursday, even before Friday's lackluster US retail number, the major US benchmark indices has already started to stage a kind of a partial recovery. Later, I'll touch one more on their technical elements, on obviously the respective technical elements on the S&P 500 and the Nasdaq 100. It's kind of more of like a profit taking to me. Yeah, if you versus it versus from the prior week comparison and the prior 4 week average. All right. So what's underperforming will be the China related indexes, that is the Hang Seng Index and the Hang Seng Tech Index, especially on the Hang Seng Tech Index, which is at negative 4.9%, almost the same as its prior week, but way below its prior 4 week average. So, given this very stark discrepancy from the weekly performance, last week performance versus its prior 4 week average, it could be a potential capitulation point, wrap for a potential either a bullish reversal or a good kind of a tactical short-term rebound that may take shape on the Hang Seng Tech Index. If you could recall, I actually mentioned in my tweet earlier on that Hang Seng Index, the Hang Seng Tech Index is coming very close to a key major support level, and also coupled with later I'll share with you all in my next slide. This week is actually a pivotal week for the China big tech stocks. Why? Because there's an event risk that's going on, which is their Q1 earnings announcement. Then one thing that is for sure that we got to keep close eyes watch. All right. So we have the Nikkei 225. We saw pretty lackluster last week, a negative 4.34% versus the prior week and below its prior 4 week average as well. So one thing positive among this performance, the rest is the German DAX, pretty resilient despite the global inflationary scare that in US has started to spread into the cyclical sector. But for German DAX, which is also kind of a heavily weighted to the cyclical stocks, has been pretty much resilient if you look at last week performance. Yeah, even though it's down compared to the previous week, but it's still almost the same as its prior 4 week average at 0.28%. All right, so now let's take a quick look at the weekly performance on the 11 S&P sectors. So we could see is that yeah, it's a profit taking week last week. So the weakest will be consumer discretionary and information technology. So don't forget consumer discretionary, there's this big cap weighting stocks. The biggest weight is with Amazon, which is part of the US big tech, as well as Tesla, which has a kind of a pretty much weak performance last week, despite Tesla and Amazon closing positive on last Friday. So all in all, right, what we could see is that financials, materials are kind of holding the fort for the cyclicals play for last week. But if we stretch it out further for the running 3 months performance, all right, till 14th of May, we could see that all these cyclicals are still performing remarkably well versus the SPX index, which is only up 6%. So we have double digit gain for the financial, 20%, energy 19, materials 18, industrial 16. So what is lagging for sure is the information technology. So I'd like to stress that over here is that if you could still recall in my Q1 outlook, we have been emphasizing that information technology, we talk about growth stocks, tech stocks. These are sectors that are expecting to lag behind, given we start to see resurgent play of strong commodities up move, which is in line with the inflationary theme that we are looking at as well in my Q1 and Q2 outlook. So Q2 is still ongoing, so I'm still expecting this lag to actually continue. That means information technology and growth stock to actually lag behind, whereas financial, energy, materials, industrial, all these are cyclical and value play. We are still expecting this outperformance to actually persist or to continue in the last, we call it 1 month or so for Q2. All right. Then now year to date, for sure, if you look at it, it's pretty much obvious. Energy, financials, materials, industrial, all showing very strong performance. The ones that's lagging is information technology, which only up 4% versus year to date, or the SPX at 11%. All right. So for this week earnings, so we could look at for the US side of the story is kind of winding down on their outlook, or on their Q1 earnings session. So for this week is actually pivotal for the China big tech stocks. So actually all these stocks are listed in US time because it's the US ADR listed on the US exchange. Pi 2 will be on Tuesday before the market open, the basis before the US market open. That is also another China big tech play. Tuesday before the market open. Then for this C will be more Southeast Asia oriented. Also a big tech as well. Not really a China big tech. It's a ASEAN or Asia big tech. It's a US listed as well, US ADR. So this is actually Tuesday before the market open. So for those who are in Southeast Asia, Shopee is actually one of their e-commerce, very popular e-commerce platform. Then you have a Walmart, a major retailer in US, Tuesday before the market open. Then over at Singapore will be Singapore Airlines, Wednesday after the market close. This will be the Wednesday after the market close, after Singapore market close. So those who actually look at my Singapore Airlines is my chart of the week. Why? Because of last week decline, pretty much significant. I think it's the worst decline in the last since 3 months. After Singapore government tightened its restriction to actually combat this current ongoing rising COVID-19 infection in the community. But what I see over here is that it's coming very close to a key support. So if you want to read more, go to our website. Actually, I highlighted very clearly on why Singapore Airlines may see a potential capitulation. Okay, so JD.com, one of the China big tech as well. So this is a US ADR, so it will be Wednesday before US market open. Then Cisco, one of the major consumer services, communication services, no, pardon me, communication services stock. Q1 earnings, that's Wednesday before the US market close, after the US market close, pardon me. Then this is one of the major China big tech stock, which is Tencent. So in fact, why is it major? Because it's the biggest component weightage in the Hong Kong 50 index or the Hang Seng index. So it will announce its Q1 earnings Thursday after the close of the Hong Kong market. Then Applied Materials, one of the US major semiconductor stocks, Thursday after the US market close. All right. So now let's go to our CMC platform. All right. So before I jump into all the various major US major stock indices that I like to highlight every week, so I always start off the week, if you could, yeah, I always start off the week with the semiconductor, okay, which is one of the growth proxy index. So yeah, so we see a bit of scare on the semiconductor last week, but where it bounced very interestingly, yeah, even though it started to break below this ascending channel support that we have since 18th of March 2020 low, and as well as the 100-day moving average that managed to cap previous dip since October, yeah, since October. So what we could see over here is that we start to see a strong rebound on Friday. Okay, a strong rebound on Friday. And where does it stop? It actually stopped at our key medium term pivotal support that I always highlight 4 weeks ago at 392.50. Then it also bounces off from a significant corresponding support of the RSI indicator at the 37% level. Okay, you could see over here. So with these two positive technical elements, I cannot validate a kind of the start of a major downtrend yet for this semiconductor stock, which means IE is still kind of positive for global risk asset or global equities. All right, because semiconductor is definitely one of the growth proxy. So once we start to see a major change of trend to the downside on the semiconductor, it definitely does not bode well for global equities space. So with these two positive elements that is kind of holding on the sentiment for semiconductor stocks, I would not want to validate a change of trend yet. That means a change of a major trend from uptrend to downtrend. And also, if you look at this line here is the 200-day moving average, also coming pretty close to the 392.50 because it's a moving average. It moves every day once there's new price action that is coming into place. So with that, right, I will be watching the intermediate resistance at 423.60, which was actually this former swing high that actually led to the break of this 100-day moving average below it, and also the ascending channel support right previously. Okay, so it actually led to this breakdown thereafter. Okay, so this 423.60 is kind of a key level to watch as well. So that will be my intermediate resistance level, or some we call it my upside trigger level. So if we could see a kind of a daily close above 423.60, so we could actually be more comfortable to say that this whole move here, this whole choppy move here is kind of a consolidation rather than a change of trend. Okay, so if we have a daily close above 423.60, then we could say that this whole move here since the top of 16th of May all the way down to the 12th of May is more like a flat a consolidation move rather than a change of trend for a further potential move up towards 458 to 495. So definitely if we start to see a daily close below 392.50, all bets are off. So this will start to see a change of trend of a major uptrend to a major kind of a corrective down move or downtrend to actually target the next support at 310, 330.10, 301.50. So these are the congestion zone here, the congestion support zone here, as well as 61.8 Fibo retracement. Okay, let me share with you. You could draw up here. Yeah, it's close to the 50% retracement mark as well. All right. So all in all, right, I would say that the semiconductor stocks are still on support, some key support with some positive elements that is taking shape. Now going on to the SPX. Okay, so what's interesting about SPX is SPX has been holding on the 50-day moving average, reintegrate back into this major ascending channel that is in place since 23rd of March 2020. So it actually did a kind of a push down, but on Friday it reintegrate back above it and held above the 50-day moving average test and reverse up. Very similar to what happened on the 25th of March this year as well. All right, then also on the early part of this year in January 2021. And what you could see on the RSI also managed to bounce off from a significant support as well, as depicted from these two lines that I draw. Okay, 37 from here, 24th of September, and from this ascending support breakdown, but reintegrate back again. Okay, so all in all, we could see a kind of a positive sentiment or positive price reaction from on Friday that led to a kind of a positive we call it elements that is still intact on the SPX 500. So going to the strategy chart, if I could share with you also, what I'll be using is definitely 40-30, which is this is last Friday low itself. All right, pardon me, it's actually 13, which is last Thursday low. Okay, last Thursday low, and this former swing high area from here. All right, that was on 18th of March. Previously, kind of a reacted, tested, and breakout All right, so this zone here will be a pretty key zone for this week that I'm watching 4030 slash 3980. So if we manage to hold on to this zone for this week, and price action eventually will start to actually retest a kind of a all-time high again. So if you could look at the current price movement here, is more like a minor bullish flag formation at this moment in time. Looking for, so I'm still looking for a kind of a new potential up leg to 4280 slash 300. Above it, you see 4330 slash 350. So all in all, right, it's still kind of a bullish for the SPX 500. So, but however, if we start to see a daily close below this 3980, all bets are off for the bulls. So we may start to see a further downside to actually go back down to actually target this area here. Okay, this zone here, which is this 3850 level, followed by this 47 37 37 3730 level as well. All right, the 720 level, which is the March low. All right, okay. Now moving forward on the US Nasdaq. Okay, so this is the daily chart. So if you look at the daily chart, a bit of whipsaw here. Notice that over here it kind of a test this pullback, uh, the kind of former range resistance, hit, pullback, and went up again. All right, above the 100-day, 200-day moving average. If you look at the RSI is still holding above a significant support. Tested it as well and managed to bounce it off it at 37% mark. Okay, so right now it's trying to actually go back up towards the 50-day moving average. So if you look at the 4-hour chart, right, 4-hour chart here, so this is the inverse hand shoulder bullish breakout, and we call it the support turns, resistance turns into a pullback support. Notice that it actually came back down, reintegrate below it, and shape a bounce. All right, so I want to take a look. How does it reintegrate below it? Okay, so it shows a lower low, right? Lower low. But if you look at the RSI, it's showing a higher low. So this is what I call a bullish divergence. And what happened? It actually, this occurrence happened again, or happened before, while the inverse head and shoulder is being formed. All right, from 26th of Feb to 5th of March, lower low, but your RSI is showing a higher low. This is called a bullish divergence as well. Okay, so very similar previously from here as well. Leap of the year, 28 Jan to 1st of Feb. All right, so what we could see, it led to a significant push up. It led to a significant push up as well. And right now, what we see is it may lead to a significant push up as well, based on the previous price action of the bullish divergence. Okay, so what it means that this push down here, and we call it a fake break, and it reverse up again from this pullback support with momentum. A bullish divergence represent, we call it downside momentum, is actually easing. So all in all, right, it actually kind of increase the odds, right, of a further potential up move, based on what the kind of positive observation that we are actually seeing on the Nasdaq 100. So I'll be using last Thursday low. Definitely this will be the key low. Why? Because it's where the bullish divergence is being formed, and as well as it led to this reintegration back above the pullback support of the inverse head and shoulder bullish breakout. So definitely this will be the key support to watch for this week. 12,920. Looking for a kind of a push up. So I want to see a kind of a 4-hour close, a bullish break from this descending trend line resistance, a minor one, from this top of 29th of April. So if we start have a 4-hour close above 13,490, we will see, or we will potentially see, or we may see a kind of a further push to retest this major upside trigger level of 14,040 level. So 14,040 level is pretty key. So if you could recall in my quarterly outlook, so let me share my quarterly outlook. Okay, so this is my quarterly outlook. We're actually neutral between 14,040 level. So definitely we need to have a weekly close above this level first before we could validate further potential up mover. This on the weekly chart. So this is my quarterly outlook. So for the weekly, right, at most we were looking for a push up to actually test this 4040 level. Then we should see towards the end of the week how does it behave, because we kind of derive on the higher time frame that 4040 is a kind of a important level. That means we need to have at least a weekly close above 4040 before we could validate any further potential upside on the Nasdaq 100. All right. So now moving on to the Hong Kong 50. Okay, so I don't, as you can share Hong Kong 50 at the earlier part of my this presentation, that is pretty much pivotal. Why? Because this week we have a bunch of key China big tech stocks earnings, especially on Tencent, which is the biggest component stock of the Hong Kong 50 index or the Hang Seng index. So what we could see here is very similar to what we see on the US tech, lower low, but your RSI is showing a bullish divergence on the 4-hour chart. All right. So what we could see is that this bullish divergence is the pretty much obvious one so far, since the corrective move that started on the post Chinese New Year, or after the Lunar Chinese New Year holiday, which is on 18th of Feb. That thereafter it just starts to do this corrective down move. So what we could see, this corrective down move, right, it could still be basing. So this could be still a inverse bullish head and shoulder formation that is forming, or some may call it already a double bottom. All right, but nevertheless it's still basing. And what's positive is that bullish divergence that is being detected on the 4-hour RSI, indicating to us that last week down move could be the capitulation. That means due to this bullish divergence that indicate a capitulation, where the downside momentum is actually easing off. So I'll be using this 28,000 level. Okay, there's a typo here. Okay, let me highlight. Okay, 28,000. Okay, so 28,000 slash 27,600, which is the low of last week. Okay, last Thursday low didn't break below the 25th March low and shape a reversal back up above 28,000 level. So 28,000 level slash 27,600 will be my key medium term pivotal support for this week. So definitely I need to have a daily close above 29,270, which is this I call it the neckline resistance of this inverse bullish hand shoulder formation. If you have a daily close above this level, we could see a further potential push up to 30,140 level, and towards the 18th of Feb swing high area of 30,760 slash 31,080 level. So if but however price action start to come back down and break below 27,600, definitely we will start to see a further corrective decline, a deeper corrective decline, to actually retest this major ascending trend line from 19 March low, this zone here at 26,650, 26,000 26,300 level, which is so the former major descending resistance now turns into a pullback support as well. All right, now moving on to the next Asia index that I want to share will be the Nikkei 225 or the Japan 225. Okay, give me a minute for it to load. Okay, so if you look at the Nikkei 225 or the Japan 225, right? So initially we are looking for a symmetrical triangle, okay, expecting to do a kind of a bullish breakout, but instead it starts to break down instead. And where it break, right, it actually also broke below the kind of a ascending channel support since 16th of March 2020 low. So the key thing over here is yeah, RSI is kind of weak. There's no you actually haven't hit the oversold level yet. In fact, it's broken below this significant support level at this, okay, at this 40% level mark. All right, retested it and come back down again. So what we could see over here is what's positive is it is only managed to bounce off from the former low area, this first Feb low area at 27,500 level. So what's 27,500 level as well? This is it's a graphical support, and if I were to draw the Fibo retracement, is actually the 23.6% of the entire major uptrend previously. Okay, pretty close to this level. So what, and also slightly above the 200-day moving average. Okay, so what we could see over here is that on the daily, yeah, it formed a kind of a also a bullish candlestick. We call it a bullish dragonfly doji candlestick, very similar to a bullish hammer at the 27,500 mark. Okay, yeah, managed to test and bounce off it. But RSI is nothing. RSI is, there's no signs of a bullish reversal yet on RSI, so it's kind of mixed right now. So if you look at the, so for this week, why I would be not so confident to play a recovery, or rather turn neutral. So if you look at the RSI, for our RSI, there's no bullish divergence. Bullish divergence as in those positive observation that we see on the US Nasdaq 100 and as well as the Hong Kong 50 index. Price of the RSI, or price action of the RSI, is kind of showing lower low in line with the price action of the index, lower low, lower low. Okay, there's no bullish divergence. So with that, right, I would be more hesitant, or to turn kind of a bullish from here, but I also can't turn bearish because of a mixed element on the daily chart that I share with you all. So it's more of a neutral level on the Japan 225 between 27,100 and the upper limit, which is 28,500. So what is 28,500? It's actually the former symmetrical triangle support, now turns into a pullback resistance. All right, so unless we start to see a kind of a 4-hour close above to 8,500, then we should see a potential recovery towards 13,230, then thereafter followed by 13,750. So if we have a 4-hour close below 27,500, then we'll see a further drop down towards the next support at 26,215 level. All right, so now going to the German DAX, the German 30. So if you look at the 4-hour chart, let me go to the 4-hour chart, or the daily chart. So it's pretty very strong. So if you look at the way this 50-day moving average is acting as a support since February this year, all right, it kind of bounce off, or not even February, even from the start of this year. All right, I think pretty nice support from it. So we could see that, yeah, last week the inflation scare actually managed to test this support level, which is at 14,800 level. Then before now, staging a bounce to retest its all-time high at this 15,530 mark. All right, which is our first resistance level to watch that we mentioned about 2 or 3 weeks ago. Nothing scary on the RSI. RSI is still holding above the key corresponding support at the 41% level. Okay, so all in all, right, the medium term elements on the daily chart seems pretty much positive. The favor still favors towards the bullish buyers instead. So no change, right, on my strategy for this week. So if you recall, 14,480 was my key pivotal support level that I have last week. So I'm still maintaining this by this key support level to watch. So looking for a further push up towards 15,530, 15,580. Then thereafter a break above this 15,580 should take us much higher to new all-time highs at 16,070 level. So no change on the German 30 index, so still pretty much positive. All right, so to sum it up, all in all, right, most of the major indices that I covered in my usual daily outlook, all of them still has that bullish bias, except for the Nikkei 225, which is the Nikkei 225 is the Japan 225 index, where we start to see mixed elements that I highlighted earlier. So I will be having a neutrality stance for the Japan 225 instead for this week. So before I end, right, let me share with you something extra. So you all know that the kind of a last week the narrative had kind of been increased, talking about that global inflationary scare. Firstly, it's being kickstarted by a significant substantial rise since the start of the year on commodity prices, feeding into various inflationary metrics like producer price index or this ISM business costs that's been rising, uh, chances of it being fit into the downstream inflationary index, we talk about consumer price index, seems to be increasing at this juncture, which is represented by the US CPI. We actually rose pretty significantly last week on the last week data release. So to me, right, I would rather have a very objective view. So let me share with you something extra. So in fact, those who actually followed me, I will share this in our Q1 and Q2 outlook, the global market outlook. So this particular chart which I plotted over here is the ratio between the S&P 500 Bloomberg Commodity Index. S&P, that means we're talking about if you start to see this ratio is rising, that means the S&P is outperforming the commodity index. So before any significant decline on the SPX 500, so I'm using SPX 500 as a kind of benchmark for global equities. Why? Because US is still has a significant share of stocks that's being invested from a perspective of a global portfolio manager's perspective. Okay, because global, i.e., global portfolio managers has a significant weightage of their shares in general in US. So that's why I'm using S&P 500 as a global as a proxy, as a kind of a good proxy for global equities. Okay, so in a nutshell, right, before any significant decline of 40% or more on the S&P 500, the there will be a divergence, negative divergence that's being found on the S&P 500 Bloomberg Commodity Index ratio. What it means that over here is that when the divergence is being seen, the S&P 500 is actually underperforming the Bloomberg Commodity Index. Okay, pretty much similar during the dot-com bubble, August 2000 to September 2002. There's this negative divergence being formed on this ratio, and also a negative divergence that's being formed prior to the subprime crisis crash, October 2007, February 2009. So very interesting for the month of May right now, because May hasn't ended. It, a negative divergence has been formed this week. Has been formed now on this ratio. That means what he's saying that over here is that the rate of, yeah, both of them are going up. So that means the rate of speed of ascent on the S&P is lesser than the ascent on the commodity prices. That means, i.e., what we could say, why I use commodity? Because commodity prices is kind of a leading indicator of indicating to us that inflationary pressure will start to flow or trickle down to the real economy. So the risk has already increased from by this ongoing negative, the current divergence that is start to see. But bear in mind that I want to share with you that, yeah, even though we start to see a negative divergence down, it doesn't mean that immediately the stock market will crash. Why? Okay, let me present to you. There's this lead time of the S&P 500 prior up move before picking. Okay, after the negative divergence are being seen on the S&P slash Bloomberg Commodity Index ratio. Okay, what it means that, okay, let's look at the very first one from the December 72 to August 74. So once you start to see the first divergence, the negative divergences, all right, so there's a lead time for the SPX, right, this dotted line, for it to actually push up further before dropping, before shaping that significant corrective decline of 40%. So there's this lead period from April 1971 to December 1972, around 20 months. Then if you look at the previous two one, for August 2000 to September 2002, from here, so before it actually peaked in August 2000, from the first divergence, that is the negative, was this the negative divergence, from the first negative divergence that's being seen, there's a lag time of 14 months, or lag period of 14 months, from June 1999 to August 2000, 14 months. Very similar from here as well. Before this divergence being seen in October to February 2009, there's this lead period of January 2007 to October 2007, a lead period of 9 months. So right now, right, this negative divergence is being detected at the end of November. Okay, so all these are means end of June to end of August. So we start to see in end of November 2020 to end of April 2021. Okay, because I don't take end of May right now because it's a monthly all these are monthly chart or monthly data, so we need to wait until end of May to see whether there's still a continuing divergence. But nevertheless, April is a divergence if we take from the period of November to April 2021, means November 2020 to April 21. So there's this divergence that's being formed. So far for the end of April until now, that means this is the first divergence, first lower low, as in negative divergence of lower high, pardon me, lower high, whilst the S&P should be continue to show higher high. So the first sign of lower high that's been detected for November 2020 to April 21. So from the start of or from the end of April 2021 until now, because now it's 17th of May, it's only about 1 month so far, or even less than 1 month, pardon me, so far. Okay, so that's why this lead period over here is so far lesser compared to the previous peak lead period. So i.e., right, what we may see over here is that in terms of probability, right, we may see a couple of months more to run for the SPX to actually shape potential higher high before actually picking. So this is what actually I meant. All right, so definitely I will actually keep posting these two ratio, or these two observation between the SPX and the Bloomberg Commodity Index. So with that, have a great trading week ahead, and I'll see you all next in my next video.